So welcome, Bryan. I'm excited to share this with our audience today. All of the changes that we have coming about, and I really appreciate you coming on and helping us. I know that both buyers and sellers are concerned and have questions, and so thank you so much for joining us.
My pleasure. Glad to be here.
All right. So where do you want to start? Do you want to start with the general changes or the items?
You want to ask me some specific questions? We can go from there, or I can just kind of start it. It depends on what you want to do.
Okay. So I think everybody has the biggest question on their minds, it seems, both mostly buyers, but sellers too, is the roofs.
Okay.
So let's talk about the roofs a little bit.
Yeah.
And how that, because I imagine not only does it affect their rate, but it's also going to affect their monthly payment too.
Yeah, it's going to have a combination of both. Really, a lot of it's going to be how many carriers are available for that are going to bid out on that property to provide insurance.
Mm-hmm.
Traditional was that an architectural shingle roof would be insured up to 20 years and a shingle roof up to 15.
Right.
And a tile roof is typically 25 to 30 years and a metal roof about the same. But because of all the claims that have been occurring in the state for the last 3 or 4 years, especially with Irma and Michael, and then a lot of the assignment of benefits fraud that's kind of been going on and the number of lawsuits, most carriers are now restricting that down to 10 to 12 years on a shingle roof.
Oh, wow.
Not even doing 20 years on a tile roof. So, as insured, as buyers come in, they're going to want to make sure those roofs are within that compliance area. Now, there's still some carriers that will take them up to those standard 15, 20 years and 25 years. But most are really restricting their underwriting to limit their exposure just because of how much payouts have been happening.
Sure. So if somebody's looking at a house that was built in maybe 2007 or 2005, they're looking at either a higher rate or total replacement.
But one or the other. What's going to end up happening? It's going to condense down the number of carriers who are willing to take that policy because of a 15 or 18-year-old roof. So the premium on that's probably going to be higher because the risk is higher. When a roof has had its lifespan decreased, and there's more. The reason they pick those years is there's much higher level of occurrence for claims and higher payouts. So they look at those types of things. So you're going to have to pay a higher premium because the risk to that carrier is higher.
Sure.
Or you're looking at, if you replace the roof, then it's going to open you up to a lot more carriers, and then your premium should see a little bit of decline versus what it'd be elsewise. Okay.
So anything else that you think that you want to add on roofs, or?
Yeah, I mean, it's important that they understand there's a difference between gable roofs and hip roofs and flat roofs on the homes. Both gable and flat are going to typically have a much higher occurrence of damage and or occurrences where they have leaks. Most flat roofs, nobody will take them over 10 years. Now, it means that if flat roofs are over a livable space, and when livable space means it's under air. With your hip roofs, the way they're designed, the best way to describe them, they look like a pyramid shape. So the wind deflects off those differently. You don't have as much lift on the roof, and the premiums on those types of roofs are going to be less than a gable roof or a flat roof just because of the damages. So when you're looking at a home, certainly a hip roof is going to be more affordable. Most newer builders are probably building most of those roofs on a hip style now anyway.
Okay. And what about the difference? I talked to my buyers about this specifically, especially first-time home buyers, because they really have no idea. And a lot of times they're like a deer in the headlights, What about the difference between a flat 3-tab shingle versus a dimensional shingle?
Yeah, they're both, as long as they're newer, they're going to be insurable through the carriers. There's not really going to be a difference in rating. It's just how long that they'll take that policy for that particular type of roof. So if it's a 3-tab, it's a traditional 3-tab roof, they're going to inspect that more. They're going to reduce the lifespan. They're willing to insure that. versus architectural shingle roof, which has a longer lifespan historically. So you'll probably get more years out of that roof overall, what the insurance carriers are willing to take.
Okay, all right. So, and let's move on to flood insurance, because that's another huge one. People want to know, can I assume a policy from another, from a current homeowner? And I've heard that's the case in I guess with some carriers, but just recently I had one, and they said no, they have to cancel the policy and write a new one. But that's what we find anyway, is that when you have especially a first-time home buyer and they're shopping what they can afford, a lot of the homes are still in the AE flood zone. But if they were built in the 70s or early 80s, the insurance is going to be a lot higher, and that kind of knocks them out from qualifying sometimes.
Yes, flood is its own animal. It's been kind of a challenge the last several years as well. And each year they're taking rates. They are kind of set to take rates for the next couple of years just to try to get them out of the red and into the black as far as the dollars they have coming in for the federal program. There are some carriers that are starting to do private insurance, private flood, which is typically less, but those are going to be in your much better risk type zones. X zones, in some cases, they'll take them in AE, but they're going to have to be, based on their analytics of where those are.
Gotcha.
Flood it really depends on the age of the home. Flood maps were not created until 1978 in this area. So anything that's built prior to 1978 is going to be rated on what they call a pre-firm zone.
Mm-hmm.
And they're going to be very expensive policies most of the time. Reason being, they wasn't raised up like you see the homes now. They wasn't built up. Most of them are below the base flood levels that you have. So let's say 7 feet's the base flood, and
Mm-hmm.
built at 6 feet, where you're now a negative 1 foot to that base. You're looking at a very expensive flood policy. And now in 2008, they changed the firms in some areas. So you have to have a conversion done on old elevation certificates. So you want to make sure that you get an agent that knows how to do that conversion, and they have it done on the side, because you may look at it and think it's +1, but in reality, it may be even now because of the conversion tables and the way they've redone the mapping, which a +1 foot and a negative and a even can be, a few $100s in difference in price.
Mm-hmm. Mm-hmm.
Now, there are ways they can reduce pricing on flood. When you have a loan, you're required to have it, and it's going to be a maximum of $250,000 that they are going to have that flood policy based on the National Flood Program. But you don't have to have contents coverage. Now, that's going to be a particular what risk the person having that home is willing to take.
Sure.
Do you want to have the contents on it or not?
Mm-hmm.
And so you can reduce it there, and then you can have different deductibles. The lowest deductible is $1,250. You can go up to $5,000. If you don't have a mortgage, you can go up to $10,000 on the deductible. But most mortgage companies will not let you go above $5,000 on that deductible. So it's really going to kind of be dependent on that. But it's very important you get an agent who knows how to do flood, and you understand the questions and stuff that need to be asked, and then that agent's able to get some conversions. There are sometimes if agent knows how to do it, they can get it grandfathered in back to the way the home was originally built, and they can save you quite a few dollars. I did one for somebody that was going to be like $2,000, but because we got it grandfathered back in, it was $1,043. So this really depends on when it's built, what was going on with it. Now, you said something about assumption of policy. There are some carriers that will allow it. Allstate will do it, but it has to be assumed by the existing agent. So let's say you're buying a home that I currently insure. For you to have an assumption of policy, I have to sign off on that. The person that's selling the property has to sign off on it. And here's the uniqueness though. You're assuming that person's policy, which means, let's say it started in June of this year, but you're buying a home in December. We're going to assume a policy, then 6 months from now, you're going to be paying the full premium on that. And the home buyer's already paid the previous first 6 months premium. So sometimes you need to negotiate that out, or sometimes the seller will just take that loss and assign it over. So it's not going to be the same time frame as your existing home insurance policy. But if you
Okay.
can assume it, most of the time it's going to be a better pricing than it would be writing a new policy.
On renewal.
Correct. Well,
So,
just generally new one, but then you just assume that policy as it's written. And you
mhm.
continue on with it from that point.
So what's the difference on flood insurance? Is that strictly rising water? Or is that going to also cover if you have a leak in your roof and your interior gets flooded?
Great question. We get this a lot, and they're both distinguishable differences.
Mm-hmm.
If the first peril is caused by the roof leak or a hole in the roof or windows being busted out by a storm, then the home insurance policy is going to cover that because the first peril damage came from the initial damage to the home, and so water got into the home.
Gotcha.
Flood is going to cover it when it's surge from the ocean, surge from lakes, canals, things of that nature, or
Okay.
it's excessive rain. If it's just excess rain and it has to be over 2 acres at flood and it comes into the home, then the flood policy would come into play then. So they're both two different types.
Okay, that's great. And I kind of threw that one out there, but it just kind of happened to pop into my head. So
Sure.
Thank you. All right, so how about plumbing? Is plumbing becoming more of an issue too?
Yes, there's 4 areas that any insurance company is going to look at. I may be kind of jumping ahead, but it's called a 4-point. But these are the 4 key areas that they're going to look that comes from claims. One's going to be the roof, 2 is going to be the plumbing, the AC, and the electrical. Those are where they're going to want to make sure all the particulars are operational.
Mm-hmm.
So plumbing is water loss is a huge claim. It's probably a lot more claim than actually roof damage.
Probably.
And it's very expensive. Just an inch of water can cause massive damage and create all sorts of other headaches for the insured. So polyurethane type plumbing, this the gray plumbing, is pretty much not going to be written by almost any carrier. And if they do write it, they're going to exclude water coverage for that particular type of plumbing.
Oh, wow.
So it's very important that you know what it is and what you're getting. And it's going to be the gray type of coloring piping in there. You'll be able to tell it pretty easily. PEX, the red, blue type of plumbing, a lot of carriers will take it. Some carriers require it to be replaced, I think, after 2012. I guess they did some differences in how they did the fittings and the type of equipment they use. The PEX is usable, but it's not as, you don't see it as common in a lot of cases. So PVCs are going to be your best. Copper is certainly going to be out there in a lot of cases on supply lines, but they want to make sure everything inside the home, so everything underneath your bathroom fixtures, your kitchen, water heater is all updated into PVC type of piping. Want to make sure you're checking the fittings, all the steel fittings and stuff underneath, or the copper fittings. If you see any kind of green or anything like that on it, discoloration, you're going to have those either cleaned up or replaced. I would suggest replacing them because that's where most of your water damages come from those breaking. So you just inspect that when you're doing the home and look at that, because if you don't, and we turn in a 4-point, they're going to require you to replace them anyway. So you might as well kind of negotiate that into the purchase and just make sure it's all ready to go. The plumbing's a big one. And then water heaters, they usually won't take them over 15 years of age.
Okay, and that makes sense. And then electrical, we see a lot of the Challenger and the Federal Pacific, and I can't remember the other names off the top of my head, but the electrical panels.
Yeah, that's a big one in the homes. Most carriers will not even write those policies at all.
Really?
The history with those and the potential for sparks and for damages are high, and any kind of electrical or fire obviously can be very destructive. So the carriers are very, very particular about what they'll take. If you run across those panels, you can get them insured, but you're probably going to have to go to what we call a not admitted market to get it insured until you can get it replaced. So a not admitted market just means they don't have to they're not approved by the Florida Insurance Department. They don't have to abide by the rules and laws within the state of Florida. If they go out of business, there's no guarantee you getting kind of claims paid and or you don't have any recourse. If you're not satisfied, you can't go to the Florida State Insurance Board and try to get rectified for you. So they have their place, and most of them are usually really well backed, like Lloyd's of London and Lexington, people like that. But
Right.
there are risks with having them. And you're also going to have to pay 25% of that policy regardless of how long you have it. So let's say you get a roof replaced in the first month, you're still going to have 3 months of premium for that non-admitted carrier regardless of when you get the new policy. But you can get it in there. So it's one you really want to look at. And, you know, from your side, Laura, and what you're doing with the negotiations or letting the seller or buyers know that that's going to be a big issue if that's existing.
Okay. So, you know, one of the questions that I've always had in the back of my mind is if I'm a homeowner and I've owned my home for 30 years and it has a Challenger electrical panel and I don't even know that is an issue or could be an issue, how does my insurance company know? And what if I have a fire? I mean.
Yeah, that's, you know, I'm not a licensed person, but as an agent, if we know, me particularly will not write it unless we're going through the proper procedures by at least communicating that with the carrier so they know, because we don't want to run into any issue with claims being denied or errors in mission on my part where we did something wrong. So I take that part real seriously on how we do that.
Mm-hmm.
But, there's always a possibility it could deny the claims, but the way they typically know it is most insurance carriers after 30 years are going to either do an inside inspection on the home, or hire a 4-point inspection before they will write that policy. Some do 40 years, but most are now trending toward 30 years. So if I'm a buyer and I'm buying something that's in that 29, 25 range, I would still get the 4-point from me personally, just to know what I'm getting.
Sure.
Yeah.
Okay. All right. And wind mitigation. That's a big one too, I imagine.
It's a huge one. And it's one that a lot of people, especially if they're moving from out of state, really they're like, wind mitigation, why do we have hurricane deductibles and all other peril deductibles? The wind mitigation is really all in relation to the hurricane coverage on a home. And there's 7 areas that report is going to cover, but I would encourage anybody that's going to be buying a home, especially if you're buying anything older than 2002, to have one done, because any roof that's going to be replaced after that is now going to be compliant to the Florida building codes of 2002, and you're going to get a better rate on it if the roof has been replaced. Now, obviously, now the roofs are going to have to be newer anyway to even get it covered. But there's other things on there too, how the roof to wall attachments are, whether it has toenails, clips, or single wraps. Those are all going to be determining factors, with clips and single wraps having a better discount than toenails. The roof to deck attachment, whether it's an A, B, or C decking, that just depends on how many nails are placed, the depth of the nails, and how much spacing they are on the roof. The closer they are and the more depth, it's going to be harder for the wind to lift it, so you're going to get a better rating. Secondary water resistant is on there as well. So it's just a thing they put down on the boards before they put the shingles on it.
Like an underlayment, so
right, to keep the rain from leaking through, and of course hurricane protection. And where, just to let your buyers and sellers know, that if they think they're hurricane protected, the whole house may have windows and everything that are there, but most of the time the garage doors are not compliant.
Right.
If the garage door has windows in it, it's not going to meet standards. So it's just knowing where you're going to get the discounts and where you're not. But you can get those reports from anywhere from $90 to $120, and they can save you several $100s on the policy. So they're definitely worth getting.
Okay. Well, wonderful. Terry, do we have any live questions? Terry's monitoring over here to see if people are posting any live questions. So what's the biggest two other questions that I think are important? How's the industry changing going into the coming year? And what impact have the storms had on rates and what we're going to be seeing?
Yeah, it's a big one, and you could just probably Google and go online and just kind of state of Florida insurance, home insurance right now. We're really kind of, not to scare people, but we're really kind of approaching a crisis mode really with insurance in the state of Florida, but for a couple of reasons. One is we've had a lot of damages over the storms with Irma and Michael and a lot of other storms in between, and that have caused a lot of issue. And claims can be filed 3 years after a named storm is done. So, just because Irma happened in 17, we've had claims coming in all the way through September 11th of 2020.
I heard that, yeah.
And you've seen a really big spike in the July, August, September timeframe versus prior year, because everybody wants to get those claims in.
Right.
Now, the problem is a lot of those claims are not legitimate, and or they're being pushed by assignment of benefits, where the roofing companies come in and have you sign a form and you pretty much give up all your rights on that policy. And now they file lawsuits against the insurance companies to fix these roofs. And so you put all that combined, and then all the litigation costs with the carriers. In 2019, there was a $701 million loss for all carriers, the 60 top carriers across the state.
Oh, wow.
A negative income of about $350 million. And just through the first half of 2020, they had almost a $600 million loss.
Oh, wow.
So as they're having those losses coming up, they're having to raise rates to bring in the premiums to cover all the payments. Now, a lot of people go, well, I didn't have damage or this or that. But if they don't raise rates, you're going to have more carriers going to fall out of the state. And if the market shrinks on the number of carriers that are in it, the higher premiums are going to go, because they're going to have to assume those risks. And to assume those risks, they have to have the premiums to cover it. So the reinsurance costs for these carriers have really dramatically increased as well because of all these payouts. So every carrier has reinsurance on them. They have insurance on themselves to cover claims, and those premiums are going up about 30%. So anytime you see those things, they get passed down to consumer. So as they come in now, you're going to see rates increasing, and especially even for people who are staying put, but buyers for sure are really going to want to talk to a knowledgeable agent to understand what's impacting that, what are they getting, because there's a lot of ways to get a price down, but that doesn't mean when it comes time for a claim that you're going to be covered. So you want to make sure you know what you're getting for what you're paying for.
Well, and that's what I was going to ask you too, is what coverages should you look for when you're shopping? Because one of the things that you educated, and we've been living here for 33 years and selling real estate full time in Southwest Florida for over 20 years, and you educated us on our new policy as far as like the screen enclosure, and how that sometimes part of it's covered but not the whole thing, and so what should people look for?
Yeah, I mean, outside your basic coverages for your dwelling, your personal property, other structures, the standard ones on the policy, there's some key endorsements you're going to want to look for. If one of the biggest ones in Florida, we have a pool cage, our screen enclosure coverage. For that to be covered under a named storm, so under a named hurricane storm or tropical depression or whatever it happens to be, then it has to have the screen enclosure endorsement put on the policy. If not, that screen enclosure will not be covered. It'd be covered in a fire, it'd be covered in a tornado, it'd be covered if something like that, a total loss to the home or something was damaged. But if it's a hurricane, it would not be. So a lot of carriers will only cover the metal structure of the pool cage. So you want to know which carriers cover that, which ones cover the screen enclosure as well. And you want to make sure you have enough. Most agents I've seen, on ones I've rewrite for people, they have $10,000 coverage on a pool cage. Well, the time you're going to need to have claims on a pool cage is when a hurricane hits. And when a hurricane hits, the prices are going to spike. Yeah. And most of the time, 10,000 is not even come close to doing that. So you're going to want to make sure you have the right coverage on it and make sure you know what it's going to cover overall. Now, you're going to get that minus the hurricane deductible. So you need to know what your outlay is going to be for that damage, but at least you need that particular endorsement. You're going to want water backup and sump overflow, even if you don't have a septic system, because the sewer systems can back up into the home. If that's not on there, then that is not going to be covered. And remediation sewer is going to be very expensive. So you want to make sure that's on there.
So water backup and overflow that can come from regular city sewer?
Yep. If we had a situation occur when Irma came, when it flooded out, a lot of the places got so much water in the sewer system and drainage system, some houses had things back up into their home from that. So yeah, you want to make sure you have that coverage. There's a new one called Service Line Enhancement. It's one it's very inexpensive to put on a home, but would encourage people. It covers any supply lines from the road into the home that are underground. So some people have their electrical is supplied underground. Some have their plumbing, all of them have the plumbing coming in. So if those get damaged, then you're going to have that covered by the policy. And, to replace supply lines and dig up and all that stuff could be, $5,000, $10,000. And this will cover you up to $10,000 for that endorsement.
So service line enhancement, is that what you said?
Yep, service line endorsement enhancement. Yeah.
So is that available for older homes that are maybe in the 60s or 70s that people might look at purchasing?
It is. Most of them are going to want to make sure all the supply lines have been replaced and everything on that. Cast iron could be one that they may be reluctant to do that on, because cast iron, there's a lot of issues out there right now with cast iron, I'm sure you know. So it really depends. Not all carriers offer it. So I think St. John's is the first to offer it, and a lot have followed suit with it. So it's a one that I would encourage. It's inexpensive to do. Then there's other ones, as far as equipment breakdown, it pretty much acts as a warranty for all your electrical components and in your home. So AC, water heater, pool pumps, anything along that line that is mechanically goes bad. It can't be just normal wear and tear, but those types of things. Or if you get a surge on your home and a lot of that's damage, it'll cover that, where you would normally have your full deductible. This is a $500 deductible. It's Florida. Surges happen all the time.
Yep.
There's a few other ones that may be specific to people. Animal liability, they have certain dogs and things like that. So Florida is the #1 litigation state in the country. They'll sue for anything. So anything you can prevent and put in front of you that is going to eliminate that or protect you against that is well worth it. They're not a lot of money, but it's just whether or not the agent's asking the right questions from you and making sure you have those coverages.
Right. Yeah, a lot of times I'll have people say, well, I found it cheaper somewhere else. And I always tell them just exactly what you said, is make sure you're getting the same coverage, make sure you're comparing apples to apples kind of thing. Yeah,
one of the biggest ways they can cut that is on your personal property. A lot of people will get actual cash value versus replacement cost. And, it can be $300 or $400 difference on a policy. But what that means is if you have a partial loss, let's say you have a fire in your kitchen and it damages your living room and everything else, and you've lost $25,000 worth of furniture, but it's 10 years old, they may only pay you $2,500, but you still have to go out and replace it for $25,000. If you have cash value, they're going to give you depreciated cost. If you have a replacement cost, you get to go replace that with like furniture, and it's covered by the policy. And that's a big difference, and it
that's huge.
gets people off guard.
Yeah, that's something you wouldn't necessarily expect.
Right.
So, well, great. Anything else you want to add? Let me see if do we have any. Okay.
Let's see. Let's look through my notes here.
Sure. This has been really, really good, Bryan. I really appreciate it. I hope that people find value in it, because we're always trying to educate people and make sure, especially people coming from out of state, because there are things here they might not expect.
Right. A lot of differences. They don't know the difference between a hurricane deductible and all repair deductible. A lot of times they just have a deductible, and knowing the differences and what you can get. There's 2%, which means that's just 2% of your dwelling covered. So if you have a $200,000 dwelling coverage, it'd be a $4,000 hurricane deductible. You can get lower, 500 or 1,000. It really depends. Me as an agent, anytime I have somebody buying a newer home, I always try to get them to do a lower hurricane deductible, especially if they have a pool. And because if something happens, their out of pocket's not as high for a pool cage, so they don't. It's most of the time the damage is going to be the pool cage. So versus having a $5,000 deductible to replace a $20,000 cage, if you have $1,000 to replace a $20,000 cage, it's much easier on the pocketbook, and that's usually what's going to get damaged. You can have some other things that can come from it, but usually. So last year in October in our neighborhood, it was actually October 19th because it was Terry's birthday, and it was about 6:30 in the morning. I mean, it was raining, but there was no, on the news they haven't said anything major,
And he went outside and came back in, and it was still dark out. And about 10 minutes after he came back in, all of a sudden we heard this horrible noise. And of course, my husband's from Kansas, so he knew right away what the noise was. And we had a tornado up in North Cape Coral that wasn't detected on any weather system or anything. It's just kind of a freak thing that happened, and it did a lot of damage to our next door neighbor's house. Took down their pool cage. So I'm just curious, in that event, I guess it depends on the carrier and everything, but since it wasn't a named storm and it was just a random fluke thing, in that case, would his regular hazard insurance cover it?
Yeah, it would, and it would be underneath this all other peril deductible versus the hurricane deductible. That's typically the way they would handle that.
Okay, interesting. Yeah, I hadn't thought about that until you were talking about it earlier, that it's a named storm, and I thought, well, this was just kind of a freak storm out of the blue, So
yeah. I guess just one thing I would go back on flood, it just popped in my head just because of that named storm, is you will get moratoriums put in place in the state when named storms are coming into play.
yes.
So if you have buyers that are close to it in their mortgages and so forth, if they know a mortgage is going to close, let's say a storm's sitting out 10 days out and they're going to close on one, they should get it closed and put in place prior to that, because if not, you can come into a closing and nobody will bind it.
Mm-hmm.
With flood, if you're trying to buy flood because you don't have it and now you want to get it for the hurricane season, there's a 30-day wait on a flood policy. So
wow.
One on July 1, it's not going to go into effect August 1.
Mm-hmm.
The other thing I would encourage people to do is that, I know people take this as a sales pitch, but if you're in an X zone or preferred flood zone,
Mm-hmm.
I highly encourage you to purchase flood insurance now, because the rate you're going to get on that is so much lower than what it would be if they change it to an AE zone or something different. And if they change it, you're going to be grandfathered in if you purchase it prior and keep it on a continual coverage. And that way you don't have to pay the new rating system on it for an AE zone. Like an X zone is $516. It could be double that for an AE zone for the same policy. And that's why you're grandfathered in. And FEMA is going to be changing flood zones. They're going to keep restricting and keep decreasing the preferred zones, just because they have to have more money coming into the program to cover all the losses that have been occurring. So it's everything in Florida is a flood zone. It's just some are considered preferred and some are considered higher risk.
Higher risk, yeah. So it's interesting you say that, because a lot of times we'll look at the flood map for people and we'll say, well, it is in the X zone or the X 500. But then, 2 houses away will be the AE zone. So what you're saying then is people should consider getting flood insurance anyway, just in case FEMA changes the maps if they're that close.
Yeah, even if we're not that close, perfect example is Irma. 25% of all claims that occur for flood occur in places that are considered non-flood zones or preferred flood.
Oh, wow.
So when Irma came through and it shifted east when it came in versus coming up the coast of Cape Coral and shifted east, all of Lehigh got hammered, and there was tons of flooding in Lehigh. Well, pretty much everything in Lehigh is considered an X zone, preferred zone. So you had all these people with massive losses due to flood that didn't have coverages. Now they can take out loans against FEMA, but those are repayable loans. If you have the flood policy, then that policy is covered by the flood insurance minus your deductible.
Wow.
They're two big different things, and just for a few $100 more, they would have been covered versus not being covered. That's why people think, well, I'm not going to have a claim. Well, like I said, 25% of all claims come from areas that are considered preferred or no risk zones.
Wow. Wow. That kind of led me to another question. I hope you don't mind. I'm not sure if you're running short on time here or not.
I'm good. No, I'm good.
Okay. Again, with Hurricane Irma, nobody expected their seawalls to collapse. And as we know, that was a huge, huge issue. insurance, and nobody realized, I guess, that they weren't covered under your policy. Is there a way to get them covered now? I mean, have the insurance companies come back and started something new, or what do you know about that?
I don't know a ton about this, and what I do know is that almost none of the carriers cover the seawalls now.
Yeah.
Now, whether they're going to be offering that in the future, I don't know.
Sometimes.
There may be a carrier here or two that would cover them, but for the most part, they're not covered by the policies. And as people are finding out, replacing those is very, very expensive.
Very expensive. Very, very expensive. Okay. Well, those are all the questions that, well, Terry's giving me the hold on a minute finger. Yes.
The question is if people have joined partway through this, will they be able to go back after this is over and see the entire presentation online?
Yes. Yes. So the question was, if people have joined partway through, will they be able to? And yes, the answer is yes. It's recorded and it'll be here. And then, Bryan, you'll have a link that you can share anywhere that you'd like us also. Okay. So the biggest thing though is, how can people reach you? Because we know we love when our customers use you. We know they're going to get some really good service and advice from you, and we appreciate that.
Sure. You can reach me a couple different ways. By phone, it's 239-599-3220. Or by email, and it's my name, it's Bryan with a Y, so BRYAN AVERY, so for Avery at allstate.com. So I'm happy to help, even if people are just shopping and want some information. Even if you choose not to go with me, I just want to make sure you get the right education and so you can make the right decision for you.
Well, that's fantastic. So maybe if you want, under the recording, maybe you could just go ahead and post your information for people who come back later.
Okay, yeah, I'd be happy to. But I appreciate the opportunity to talk to you and answer any questions. And anytime you have them, reach out to me.
Okay, thanks so much. And I'm sure we'll be talking soon.
All right, thank you. You guys take care. Bye-bye.
Bye.